Google just did something unprecedented. It borrowed a massive sum of money in Europe to be repaid by a CEO 100 years from now. You might think this is a fantasy, but the reality is Europe's old money is lining up to snap these bonds up. This is the new capital reality unfolding right before our eyes. Why is the world going so crazy? Have Europe's legacy investors lost their minds? Whether you hold tech stocks or not, listen closely. This is a wake-up call. Save this video, you'll want to come back to it. Just days ago, Google's parent company, Alphabet, left Wall Street stunned. It raised $32 billion globally in just 24 hours. That's more than the annual GDP of many countries. But the real shocker? In the UK, it issued a bond with a 100-year maturity, a century. The bankers signing these contracts today will never live to see them repaid. This debt is a problem for their grandchildren's grandchildren. The last time a tech company did this was in 1997 at the height of the dot-com bubble, when Motorola issued 100-year bonds. Back then, everyone thought dot-com was the eternal key to wealth. Then, the bubble burst, and those bonds became tombstones of a frenzied era. 28 years later, Google is following suit. You're probably wondering, does Google even need the money? They aren't short on cash, but they've been pulled into a capital black hole. And its name is AI. Just days before borrowing, Google announced its AI spending this year would hit a staggering $185 billion. Double last year's figure, this money is pouring into new data centers, sky-high chip prices, and retaining the world's top talent. Today's AI war isn't just about algorithms anymore. It is a primal war of financial attrition. It's a race to stack servers, deepen computing power, and blast a moat with pure cash. Google is just the first giant to publicly admit it's running low on ammunition, rushing to the bond market for supplies. Oracle needs $25 billion. Microsoft and Meta are staring down massive bills stretching to 2026. Morgan Stanley estimates the total borrowing of these cloud giants will surge from $160 billion last year to $400 billion this year. Their own profits can't feed AI's insatiable appetite anymore. So, they turn to global creditors. Google's strategy is a masterclass in global capital sweeping. First, it grabbed $20 billion in the US, where Wall Street's trust is unconditional. Then, it turned to Europe. It shattered the UK's corporate bond record with £5.5 billion. Tucked in, there was the 100-year bond. Google is testing the waters of every major capital pool. The US dollar is its staple food, but European markets hold what it wants most: long-term money from pension funds and insurance companies. These institutions have liabilities stretching out decades. Google's 100-year bond was a godsend for them. But let's be real, who usually dares to issue 100-year bonds? Governments, or millennia-old institutions like Oxford and Cambridge. Entities built to withstand cycles. But a tech company? The very nature of technology is disruption. 30 years ago, Nokia ruled the world. 10 years ago, no one imagined short videos would dominate our attention. Today, we talk about OpenAI. But what will the landscape look like in just 5 years? 100 years from now, today's tech giants might just be historical footnotes, like the railroad barons of the 19th century. Yet the market's reaction was wild. The £750 million 100-year bond was oversubscribed by 7 times. Vast sums of real money are betting that Google will become an immortal business entity. But here is a warning from the financial world. 100-year bonds usually appear at the absolute peak of market euphoria. They are a signal of overflowing confidence, and the risks are hiding in plain sight. Take Austria. In 2020, during the era of rock-bottom interest rates, they issued a 100-year government bond. Investors fought over it. But when interest rates finally shifted, the bond's price plummeted to below 30% of its face value. Investors were wiped out. If government bonds face this fate, corporate bonds are a minefield. U.S. retail giant J.C. issued 100-year bonds in its heyday. Just 23 years later, they went bankrupt, and those bonds became worthless paper. Tech becomes obsolete. Giants fall. That is the iron law of business. Google's 100-year bond is the tip of the iceberg. It signals a fundamental shift. In the future, tech giants may look less like high-growth innovators and more like infrastructure companies, like railways and power grids, crawling with long-term debt. This century-long borrowing is a heart-stopping gamble. If AI returns are slower than expected, the hundreds of billions in cheap debt today could turn into dynamite tomorrow. And when all the giants go on a leverage spree at the exact same time, systemic risks build in the shadows. So, the next time you hear a grand story about AI changing the world, ask the practical questions. Where is the money coming from? Does it need to be repaid? And who is left holding the bag when the bill comes due? I'm Panda, guiding you through the global wealth landscape.